Well, turning to the latest business updates now and starting with a look at how the markets are faring. A good day on Wall Street as all main indexes there closed higher. The Dow Jones up at 300 points, or as you can see there, 1.18%. The tech-heavy Nasdaq also well into the green, up 1.8%. All eyes now will be on the US Federal Reserve as it meets this Tuesday and again on Wednesday to see if it's going to change its monetary policy. Across in Asia, a bit of a dip there with shares opening lower as investors shift their focus to upcoming data and central bank meetings. But as you can see, it's mostly in the green, just the Nikkei in Tokyo sliding into the red zone, down almost half of 1 percentage point. Reaching an agreement regarding geographical indicators, that is protections for products from particular regions like champagne, for example. EU leaders say positive steps have been made during the virtual trade summit with China on Monday. There are, however, still issues to iron out before a full deal is reached, notably on technology transfers. Luke Shrego brings us the latest from the talks.
When it comes to relations with China, Brussels is no longer prepared to allow Beijing to tread on its toes.
Europe needs to be a player, not a playing field. Today's meeting represents another step forward in forging a more balanced relationship with China.
With over €1 billion in goods exchanged every day, the European Union is China's largest trading partner. However, Beijing often imposes its own rules. Until Monday, it had often failed to respect regional European food designations, which will no longer be the case, with Brussels doing the same over Chinese equivalents.
I am very pleased that we have come to a very practical step when it comes to trade issues, namely an agreement regarding geographical indications. And it shows that European foodstuffs are very high quality.
An accomplishment for the EU, with neither Australia nor New Zealand having the same concession. However, there remain numerous issues to solve on the way to a deal. European concerns over human rights in China, for instance, in particular in the restive western province of Xinjiang, not to mention forced technology transfers and subsidies for Chinese firms.
With market access, it's not a question of meeting halfway, but it's a question of rebalancing the asymmetry and a question of openness of our respective markets. So in other words, China has to convince us that it is worth having an investment agreement.
Brussels, it seems, is determined to be treated fairly, even as the trade war between China and the United States drags out and stagnates.
Meanwhile, the US has announced it will ban a range of exports from China's Xinjiang region in protest over allegations of forced labour of Uyghur Muslims. Cotton, linen, cosmetics and electronics from 5 specific manufacturers, all on the blacklist. The measure stops short, however, of cutting all exports from that area. The acting head of US Customs and Border Protection Agency described the companies as practising modern-day slavery.